When you're thinking about learning how to trade, it's not all this other stuff. It's what's working, what is the setup, how does it look, how do I find it, how do I manage the risk, what is my entry, and then how do I manage that trade so I can extract the most out of it.
So how long have you been trading?
Since I had hair like Bradley Cooper running.
Yeah.
It was down to here. Oh man.
When was that?
I was sashaying in the halls of Michigan State University, 1999, computer halls, acres halls, looking for the 4-H babes. Obviously I didn't get any because I'm a computer dork and I was in love with trading.
Yep.
But I've been trading since 1999, unsuccessfully for many years.
Yep.
But I went full time in 2008. So I am 42 years old.
Awesome.
Don't tell the girls from Bumble, because that says 34, obviously.
Well, look, I want to know this, man. Like, if your life is on the line,
Yeah.
and let's say you had a son, right? And his life is on the line. Let's say that. Let's say his life is on the line. You have to teach him how to trade to be successful, and if not, then you never see your son again. And you had to teach him within like 30 days. How would you do that?
Perfect. That's a great question. So enough with the struggle porn.
Yeah,
right?
yeah.
Enough with the struggle porn. So there are two aspects in trading, and for YouTube purposes and trading purposes, people focus on trading psychology so much, right? The reason that people focus on trading psychology so much is two facts. Number one is that in America, like, everybody's on Xanax and Adderall, so everybody thinks they're broken.
Yeah.
But that's actually not the case anyways, right? Like, if you go to your job every day, you have discipline. If you pay your taxes, you have discipline. If you wake up and go to work, you have discipline. So almost all people have some inherent form of discipline in their lives, no matter what. They're good to their kids, they're good to their wives, they show up to work.
Yep.
They are disciplined people. For some reason in trading, we've gone into this thing of like, hey, we're all broken. So now we're like into like trading psychology. I need a shrink. I need some ice baths. I need to eat butter all day, right? I gotta stop drinking. I gotta not have friends. I gotta wear sun blue blockers while I trade because I can't have blue lights in my face. And this is all, there are truths to all these things, but we've taken them too far. So the biggest piece of trading psychology, why people are failing, is because people actually don't have an edge in their trading. So you do podcasts, you talk to a millionaire trader, right?
Yep.
And he says, hey, I made $100 million. Okay, describe me your strategy in detail. Can you quantify it, qualify it, right? And most people be like, well, I trade gappers and I do this, and right?
Yeah.
Most people can't even do it, because most people don't have that. So what happens is when you don't have a quantifiable, qualifiable strategy, you start diving into the discipline, the struggle, these kind of things. But before you get into those things, you have to come in with, okay, trading is a business. Do I have a business plan? Do I have a strategy that actually works? Okay, the strategy works. How does it work? When does it work? When does it work is actually more important than if it works, because there are 4 stages to the market cycles, right? So the strategy that works right now would not have worked 6 months ago. The strategy that worked 6 months ago actually would not have worked 6 months before that. So the market cycles are always changing. So do you have a strategy that is scalable in all different 4 market cycles? You have accumulation, distribution, run up, run down phases, right? So when you think about how you're going to get started in trading, people go into the trading psychology portion of it and they forget the edge. Can I build something with an edge? So what are things with edges right now that we know? So let's look at the last 6 months of the market. What are working right now? Earnings breakouts are working, all right? So one setup that is working right now, if you look and do a scan right now of stocks that are down 80 to 90% off their highs and base out for 6 to 12 months, and then they have a piece of news out because they're down so low, some spark that gets it out of that base. So a basing period is called accumulation phase. It always comes after a rundown phase, which is your bear market. So you need a stock that's at least 50% or more off its highs. You need minimum 6-month base. Then there'll be some piece of news that sparks it, right? Some piece of news that sparks it. Earnings is the most powerful thing in stocks. It's not about pumps, dumps, this, that. Earnings. Stocks move long-term on earnings. Earnings breakouts is the most powerful movement in stocks, and that is quantifiable. It is called post-earnings announcement drift syndrome. There's actually studies upon it. You Google it, there are people from universities that have done studies on it. When stocks break out on earnings, they beat on earnings. They're growing 100%, 50%, 100% sales, 50% sales, and you have these surprises that are coming in. Surprise that people don't know.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
Those lead to drifts. So let's go back to what's working in this market. This is called edge. Okay, every market has something that's working. So right now we know, if you look at PLTR, stock's at 50 bucks, gets down.
It's June 2023 right now.
June 2023.
Just FYI.
PLTR, it's at 40, 50 bucks, right? Gets down to $6. It bases out for 6 months or more. It's at $6, $7. Earnings comes out. It's a little bit of a surprise. All of a sudden they start throwing in, hey, we do some AI. The day of the earnings, and I'm going off memory, so just be careful. That'll be 2-3 million shares off. It did 200 million shares that day of earnings. All right? Gets to $7-8. All of a sudden it goes sideways for 3-4 days, lets the 9 EMA catch up. It tests right on the 9 EMA, bam, it goes up. Next thing you know, it's at $16. That setup is working. Carvana, biggest turd in the world, right? Well, what is it? It's $400.
Yeah.
Gets down to $5-6, right? It's been basing out. All of a sudden they do a surprise news piece, say, hey, the earnings are not going to be so bad. Whether it's actually true or not doesn't matter, right? Stock gaps up, hangs out for a few days, consolidates, and then boom, it's off to the races. UPST is sitting at $10, $12, right? AI, this used to be $400. Stock explodes on earnings. Actually, the next day after earnings, it collapses about 20-30% over a couple days, hits into the 9 EMA, and then rips from 13-14 bucks, and now it's at $36. So that's an edge right now.
Right.
Edges change. So when people are thinking about, okay, how do you start at trading? The first thing you want to do is think about, okay, do I have an edge? Do I have a system in place that finds exploitable edges in the market that's working right now? Can I find them via scans? Right? So do I have software to find these things? And then, okay, do I have a process in place to identify said subjects via just general knowledge, anecdotal knowledge, like, hey, these are the things that are working, or somebody taught them to you, whatever, right? So I have a history, like I've seen the last 3 months, this type of thing is working. Okay, so now you know what type of stock to look for. So now you're narrowing it down. Okay, you're narrowing it down. What you really want to do is say, what are 1 or 2 ways that I can get into this name? So you have a big picture idea. This is your earnings breakout. This is a stock that's on dead lows. It's about to explode. When it explodes, we're not talking about 10% gains. We're talking about things that are going to go up 50, 100, 200, 300% over a course of a couple months. We want to be a part of this, right? So whether you catch it that day or not doesn't matter. What we need is a system to say, how can I get it when my risk is low? And so the easiest way to do it, for if you're new, is, okay, the first consolidation. Let the 9 EMA catch up, you hit the first flag pattern, the first pullback pattern, and you're gonna go. So if you look at, I would just memorize the charts of like UPST, I would memorize a chart of PLTR.
Yep.
Even if you look at like a higher price name, NVIDIA just did this.
Yep,
Right? So
they did,
NVIDIA was $300. It gapped up to $400. It pulled back to 385, maybe 378. I'm going off memory.
It's going to new highs
And that was the 9 EMA. It sat there for a couple days. And then what did you start to see the last few days? It sat at the 9 EMA and it started to curl its way up, and now you're going. So it's a pop, consolidation, let the 9 EMA catch up so you can manage your risk and go. So that is one strategy. Where people mess up in trading is like, okay, they know one thing, they buy a class, they watch a video, they got this one thing, they're like, okay, I can do this. So this one thing I showed you right now is the most powerful thing in the market right now. But it's the most powerful thing in the market in this particular stage. When the stages change, then you need new setups. And so what you really want to do is learn, okay, number one, how does the market work? Number two, how to identify trends. Number three, what are the things that causes trends? PRs, earnings, things that are coming out of big consolidations. And then four is, okay, what are different entry points that I can use to get into these things? Then you need to identify, am I a swing trader or day trader? If you're a swing trader, okay, your entry point is going to be on the daily chart as you're consolidating or pulling back into a moving average or some level of support. Then you got to hold that thing. You manage your risk and you got to hold that thing. So you need a whole different level of sell rules. If you're a day trader, okay, it's hitting these levels on the daily chart. Now I'm using my 5-minute chart and I'm doing a red to green flag pattern, VWAP pattern, whatever it is, but you're using 5-minute charts to get into it. So it's a whole different type of edge. So a lot of times when you're thinking about learning how to trade, it's not all this other stuff. It's what's working, what is the setup, how does it look, how do I find it, how do I manage the risk, what is my entry, and then how do I manage that trade so I can extract the most out of it. If you have that, you're not gonna really sit there and think about like, oh my God, I'm broken, my mom doesn't love me, my dad doesn't love me, let me read some Mark Douglas books, like take some ice baths.
Okay.
You do those things when you don't know what to do. If you know what to do, and you know it down to a T, you have rules, like a checklist, and then you can't do it, that's a whole different ballgame, right? Then you have to get into those things. But if you know what to do, and even if you're new, you still have to practice that checklist. So how you always want to look at it is like this. Anybody ever bake a cake, right?
Yeah.
I'm not a baker, but you want to bake a cake. So a trade setup is like a recipe. Say you wanted to bake a cake. You've never baked a cake in your whole life, right?
Right.
So you say, Kunal, I want to bake a cake I've never cooked in my life. And I want to bake this type of chocolate chip cake. I say, hey man, this guy makes the best cake. Here's the recipe. This is the cookbook I found it from. It's on the Oprah Winfrey Cookbook Club.
Right.
So you get the cake. So when you get the cake, you never baked a cake in your life, right? So what do you have to do? You have to follow every single step of it piece by piece. And you cannot deviate from it. Because if you deviate from it, the cake will not taste like cake because you're new. You don't know how to cook. And now you're doing something, so if you deviate from it, it's no good. But what happens is if you follow it piece by piece, guess what? Your cake will taste okay. But what happens is if you follow that cookbook, you had it up in front of you. Say you bake that cake every day for 100 days. You're a pretty smart guy.
Yep.
You do it for 100 days. Do you need that cookbook at the end?
Nah, you're probably good to go.
No, you don't. And a trade is the same way. If you deviate from any piece of a setup, the trade will go to crap. But what happens is if you do it hundreds of times over and over, all of a sudden, your cake is perfection. And you can get rid of the cookbook. But till you get that, you can't. But the beauty of it is this. Say this, you built this, you've done this cake 100 times.
Yep.
Now you've done it 200 times. You don't need the cookbook. All of a sudden, you know the whole recipe, it's intuitive. You're not even thinking about it. You're not thinking about the trading psychology, you're not thinking about the losses, the fears, the momentum. You're just thinking like, I am a cake master, right?
Yep.
This is what I do and I'm making my cake. But the beauty is when you're a cake master, all of a sudden, you know what you can do? Is like, you know how to make it taste good no matter what. So when you were new, if you took 2 ingredients out, it wouldn't be a cake, right? But when you're a master, you take an ingredient out here, you take an ingredient out here, and you put a little of this in, it tastes even better. Because you are now a master of that recipe, and you've done it so many times over and over. And that's what a trade is. Once you get expertise and competence at a certain setup, all of a sudden, you can start adding your own flavor. And that's where you get that individuality, that intuition, that market sense, where you become something greater than you are. So you follow the recipe, build an edge, and then you can make those tweaks to it later, and that's when you become a true master. So,
And that's in 30 days.
30 days.
30 days, I'm saying. Well, look, man.
How many times you gotta bake a cake to really know it?
I don't know.
I mean,
But look,
this will tell me how smart you are.
what I want to say real quick is you mentioned a lot of things. And so what we're going to do is don't forget to hit like and subscribe, but we're going to provide a little list of everything he mentioned, like consolidation, what does that mean, breakouts and so forth, just so you can kind of have something to print out and understand the whole list itself. So again, Kunal, thanks for being here, brother.